Hello, everybody. Good evening, and welcome to the Halls International Business School. My name is Max Gituba. I go to Halls International Business School. I am technically the host for the day. So thank you so much for coming. Thank you for your time. Today we are taking this event, which is themed How to Make Safe Investments for Impact and Growth in Africa. As you can see, we have a great panel of thought leaders that you're going to hear more about as the event goes on. What we're going to do is we're going to start with interviews. I'm going to be talking to Daktari here. For those who are not Kenyans, Daktari simply means doctor. So give it as a term of endearment or respect to people who have achieved that status. So Daktari, you might hear me say it, and so I want you to feel at home as well. So we're going to start with interviews with Daktari, and also this Daktari Caroline as well. She's going to come next. And after that, we're going to take a short break, and we're going to come in with presentations on strategies of how to invest from both a valuation perspective and a legal perspective as well. So I think you're going to be very interested in those conversations. But first, without further ado, I think we can start with Daktari Patrick Njoroge. Of course, you do not need much introduction to many people in the audience, but I'm not going to tell your story for you. We're privileged to have you. So let's start a little bit with your story. Everybody who, maybe if you're not Kenyan, you don't know, Dr. Patrick Njoroge, he is among many things. Trust me, he was sending me his resume to put on the bio, and there's too many things. There's almost too many things to put. So he is a visiting scholar at MIT. He is a former central bank governor as well of Kenya. He had a very good run, one of the most successful runs we've had of a central bank governor since Kenya became an independent nation. So we're very excited and he's a thought leader across Africa, across the world, on finance, on economics. He sits on many panels, and so we're very privileged to have you today, Daktari. So let's start with your story. You're a very accomplished global thought leader in economics and finance, and I'm sure there's a story behind that. Would you care to tell us how this journey started for you and how it's evolved over time to bring you here?
Thank you, Max, and thank you for inviting me here, and great to meet you all. It's always great to see people I haven't met before. My story is actually quite simple. Why? Because I grew up in very much a normal family, and my parents were very interested in education. My mom was a teacher, and frankly, there are many Kenyans whose moms are teachers or whose dad is a teacher, so that's not special in any way. My dad worked for the government. So anyway, the point is that they were all very interested in making us good human beings. And now looking back, that to me is what was more interesting. They were interested in making sure that it included, in as much as we could, being good professionals. So being good students, studying hard, etc. And at the same time being good human beings, right? Being good citizens in general. And also, we were kind of a Christian home, so being also good in terms of Christians, good Christians. So those are the three elements that I grew up sort of learning and preserving. I went to any of the, my high school was Mangu. I went to Mangu. Now there are tons of people that went to Mangu, so it's not a surprise by any means here. I then went. When I was there, that's when you had from O levels and A levels. So I did my A levels in Strathmore. Again, Strathmore College. Again, nothing exceptional. But these were all very good schools, as we all know. To this day, they are good schools. At that point, I wanted to be an electrical engineer. I was always fascinated by math. I was always fascinated by electrical things and tinkered in the lab, etc. among years doing that. But when I was about to go to the University of Nairobi, I had been reading quite a bit. And I somehow began to feel that being an electrical engineer is not what I want to do the rest of my life. So I switched and went into Bachelor's of Arts, studied economics, and continued. So that's the background, the deep background, if you may. But quickly after that, I ended up, I did my undergrad and my master's in the University of Nairobi, and after that, did my PhD at Yale, and then eventually worked for the government for some time, got a job at the IMF, did that 20 years, and then got a job at the central bank as the governor, did that for 8 years, and here we are.
Fantastic.
So it's kind of a short story, but there it is.
I mean, I'm sure there's a lot of more detail to it, but I mean, it's a very interesting, picture of your journey. Thank you for sharing that. And as you graciously shared, you've had a fascinating journey, but there is a pivotal moment in my view, which is after 20 years of the IMF, you went back to Kenya as governor of the central bank. I believe you were in the States at the time, right? You were working in the States. So, a lot of us were here, we're working in the States. You know what that feels like as an international person, making it in this country. So you decided to go back to Kenya as governor of the central bank. So walk us through that. How did working globally shape how you see Kenya, and what made you decide to come home?
Yeah, so I was working in Washington D.C. for the IMF, sort of top of my game, right? At that point, I was working in the office of the managing director. So, I mean, there isn't much more that really I could hope for. As an economist, I'm doing what I enjoy doing, etc., etc. Of course, that was a very rich experience, and worked in all sorts of countries, worked in all sorts of situations. I remember somebody asked me about how many central banks have I dealt with, and I said maybe 1/3 of the world's central banks. You've had intimate knowledge of them and helped them one way or the other, hopefully for the better. So yes, it was something. It was a very rich experience. It's not an experience you kind of like wear on your sleeve, but it's there and it gets into your head, etc. Meaning you learn things, yeah. So the position opened because the previous governor had retired, and they advertised it, and frankly, I wasn't interested in doing it, in becoming the governor of the Central Bank of Kenya. I wasn't interested. But anyway, so a friend of mine called me. This is a friend, not a politician, right? Let's be clear. A friend of mine called me and said, hey, this job is open. You need to take this job. I told him, yeah, I hear you, but, I'm not interested. And so I remember one day I was running, and those who know Washington D.C., I can tell you precisely where I was. And it struck me, I can go, I don't know how this thought came into me. I can go and work in Kenya, and maybe I could make a difference. But I could also go and work there, and maybe I'll never make a difference. And suddenly, I had a problem. I didn't know which of these two it would be, whether I could make a difference or not make a difference. And that troubled me. I mean, it wasn't some sort of doing good and all those other things. It was just that I didn't know how it would come out. And so in that trend, I said, well, there's only one way of finding out, which is take the job. And if I take the job, maybe I'll succeed, and therefore I'll know. Maybe I'll not succeed, and therefore I'll know. So the outcome will be clear, right? So that's why I took the job. There wasn't any, but I knew I could do it, right? Meaning, having worked with a third of the central banks in the world, this is just one more central bank, and et cetera, et cetera. So I think from that perspective, then obviously one needs to go through the various things that one needed to do to apply, etc., interview and so forth. And I think that didn't bother me because I was pretty much confident that, I'm pretty good for what I'm doing. So that's how it ended up. The experience itself, before the 20 years at the IMF, it shaped me, and even before that, in the sense that I got good training on the issues that I had to deal with in the central bank. I don't think there's a single issue I would say that I hadn't come across it before. In the 8 years we were there. Now the context is always different, but yeah, change the name, change the intensity, change the political sort of frameworks. I mean, most countries are pretty much the same, or rather the economic, let's say the economic paradigms that we learn, you can apply them to a particular point, and I think I felt confident that was the case.
Interesting, and that's very powerful, making a difference being the reason why you went back. So building on that, so you became governor in 2015, and Kenya in particular was facing challenges, currency pressure, inflation, questions about the banking system. I was there, I was 15 years old, but maybe I had a sort of peripheral view of it. So what was that like? You talked about context, so I'm wondering what that was like, you now being in the driver's seat, and what did managing that crisis or those situations teach you about how African economies as a whole work?
I don't know. I think maybe I could say there are many lessons I learned, okay? And I think the first lesson is that the rules of economics apply. Yeah, and they don't apply, let's say, cut and paste. You do need to sort of change what needs to be changed. But it is important to say that because a lot of us in that space, in Africa, in other places as well, believe that we can bend the rules of economics, right? So prices are going up. Well, let's have a law that stops the prices. If you remember, one of the fights I had when I got there was about interest rate caps, and Parliament was adamant to actually put these caps because they felt that interests were very high, and so the way to do it is cap them at a particular point. And we argued. And you can actually, there are some elements of that are in this book, Brothers in Arms. And we argued to the public and also to the politicians that this won't make sense. This actually will be something that will harm the economy. And we explained it quite clearly to the public. The politicians, on the other hand, or the view, it doesn't matter. We know what, we are the lawyers. We are the guys that set the law, and the economy is going to follow our law. Anyway, so there was that tension, and in the end, they won in terms of applying the interest rate caps. But what we told the public was going to happen actually happened. And it's good we spoke to the public directly, because we did tell them, you won't get the credit, yeah? You'll be rationed, you won't get it, it won't be available. And it will only be available to, let's say the rich, the elite, not you guys, et cetera, et cetera. The economy is going to go into a tailspin, et cetera. And that's exactly what happened. So in some sense, it's important to know, and that was a lesson for everybody. And fortunately, because of that, the things were reversed, and also they allowed us a bit more space, right? Meaning I didn't have the problem that, let's say, the Fed chair here has with his president, where the president is insulting him directly in the media, etc. Right? There was a lot more. We may disagree, but there was more understanding in terms of language, etc., etc. So, what point am I making? That is something that I think is important to explain to people. Yeah, that those laws apply of economics, and you have to use them appropriately, understanding that. Now, when you go, there's another element that I want to say, to explain. It's important to appreciate that we need to explain things clearly. Unfortunately, we economists love jargon, yeah? So we can talk to each other and talk about paradigms and this and why things work in this way. But Wanjiko, meaning the regular citizen out there, has no clue what's going on. It's like you guys are fighting and we have no clue what this is. And it was important, and I learned this also, that it is important to talk directly to the citizens. And this is a lesson that I have tried to communicate in this book, right? That I just now mentioned that communicating directly to the regular people. That's another lesson that I think is important. Unfortunately, if you think of some of the economies, we generally try and communicate to business analysts, like yourselves, but at the end, we do need to communicate on this. The other element was the importance of innovation. That I think is extremely important. There's a lot of innovation going on, not just M-Pesa. M-Pesa is just one more of many, right? But what I think, and a lot of you here are probably in the space of, engineers, etc. And so the sort of the back end things, yeah, coding and all that. You know a lot about that. But the point is that to prepare a proper product takes time and effort. And there are many elements that you really don't know until you have actually prepared this thing. For instance, I'll give you a simple example. These guys used to bring their for approval, right? So at times we would meet them, and when I was really tired, I would go and join them, and sort of have this conversation. It's like a hackathon, so they explain what they're doing. And I remember this particular case where this person was presenting the thing and is telling us, oh, look at the blue colors and purples and this. And I asked that question, not because the other people in the team would not have asked it, but just because I jumped up and asked the question. So how long does it take for your product to complete the transaction? And the guy said, oh, maybe 40 seconds. And I said, absolutely not. There's no way we're going to approve this if it takes 40 seconds. So they went and came back, or they had brought it down to 20 seconds. Absolutely not. Came back, 10 seconds. No way. Anyway, in the end, we allowed them to go we approved it at somewhere around maybe 7 or 5 seconds. The point is that these guys didn't understand how important it was to make that transaction quickly. Yeah. Our standard was actually 4 seconds. 4 seconds. And these guys didn't know. I mean, they had everything else done. They had coded in Python or whatever it is that they code in, but they had forgotten the most important thing, which is the time for the transaction. So my point is the idea of innovation is no longer just some sort of brilliant thing, the way people say, oh, look at this thing that we have it was more practical. What are the things that what are the problems we are solving, etc. So the standard for innovation for me became very clear. And all that is something that maybe others have worked on. Finally, obviously there's the whole issue of working with the powers that be, meaning the politicians, the other decision makers. And there's always a dog and cat kind of fight. Yeah? Why? Because the objectives are different. Yeah? The objectives of the politicians are always different from the objectives of the central bankers. But you have to work with them or to try and, you're in the same house, yeah? You're in the same canoe. So you do need to make sure that the outcome is appropriate for everybody in some ways. But at times it will get ugly, for sure. And yes, there are some things that you can say that you end up lacking cohesion, right? Or coherent policies. And I think that's another thing that we learned. These are all lessons. There are many more, but I think these are the top lessons that come to mind.
Yes, that's very interesting. I applaud you for writing your book and really democratizing this knowledge on economics, because personally, in my opinion, this basic economics should also be mandatory for anyone, especially in office, to understand some of these dynamics, because they can cause a lot of pain to a lot of people just by making decisions that they may not understand. But just going back to investment, there's a lot of people here who are interested in Africa as an investment destination, right? And if we're talking about economics, we're talking about all these things that can happen: currency swings, interest rate changes, occasional shocks. Is there a difference, and if there is, what is that difference between temporary turbulence and truly disruptive risk for investors thinking about investing in the continent?
Okay, so the way I see it is, maybe I'm not very clear about temporary turbulence and what's the second thing?
Disruptive risk.
Yeah, maybe I'm not clear what the difference is, but I would probably say, for me, I look at it from the perspective of, you'll always have volatility. Volatility is there to stay. Yeah? And what is clear now is the swings are much bigger. Much bigger. When I started off, the shocks we knew there were going to be shocks, but they were not that significant. I remember maybe in the first year or so, maybe 18 months, we counted the shocks. But they are nowhere near like COVID or Brexit or Ukraine war. Those things will be with us for forever. Yeah, and you also have policy changes, which I don't know. So for me, it is more first and foremost the size of the shock, the volatility. How big are the swings? Now, some of these are disruptive by nature. But I think if you understand it, you can deal with it. So for me, the issue is it something that you can actually, let's say, remediate, right? Do you have, for instance, if you are thinking of volatility and thinking of the economic volatility, what is it that you're going to do to minimize that, right? To minimize the impact of that. And you have a whole, let's say, slew of instruments that you can use, right? Depending on the market, etc., buying things forward, etc. If you remember, and that, by the way, is not necessarily, a sure thing. For instance, you can buy oil futures, but then, the price may go down. So you're paying, at $60 a barrel, as I think KQ was doing, but the price is actually like $30 a barrel, whatever it is. Yeah, so you end up losing a shot on all that. So that's my first point of appreciating that. But I think there's another element I would want to stress, which is as financial people, yeah, you make money you can actually make money coming and going, right? So it depends on what your objective is, yeah. So if you're a trader, if you're a sort of a speculator, or for that matter, if you're just my favorite people are the forex traders. Yeah? I've never understood these characters. If anybody knows what they do, they can talk to me so that I can understand. Forex traders, yeah. I think we understand what they do with that label. But the point I'm making is if you're actually just sort of doing carry trading, yeah, if you're a carry trader, I mean, it's the volatility that actually helps you, yeah. And at times you lose your shot, at times you don't. So in that sense, volatility is not something that you should be afraid of, yeah. But you should do something about it. Yeah? Now, for those of us that cannot do anything about it, think of a farmer, yeah. And the price of inputs like now have pretty gone crazy, or for that matter, even the price of their outputs have gone crazy. I mean, the poor farmers are left high and dry. So, and I think that's why we need to have more markets, deepen our markets so that they will have more options. I think to me, that's the call of deepening the capital markets.
Yeah, I think that's an important conversation, and I'd like to add on that because I'm an investment researcher as well. I've worked on research on risk factors within the African markets, and particularly Kenya as a case study, which we'll be talking about a little bit later. There are certain risk factors within each market. So I would, advise investors to understand those risk factors. And as Dr. was saying, you would need to strategize your portfolio in a way that actually benefits from the volatility or protects yourself from the volatility, because you do need to accept that volatility is part of investing. There's always going to be a risk, but that's why you're rewarded as well for taking the risk. That's really how investment works as a whole. Nothing is fully risk-free. Even the U.S. government treasuries, as we've seen, they just go up and down, and you could lose your shirt in that as well, right? So building on that, you're talking about foreign exchange. So in my own research, as I mentioned, foreign exchange risk has been considered the biggest risk factor for investments in Africa. So what would you think about that? What do you think about that statement? And are there any other pertinent risk factors in particular that should be considered when investing in Africa?
I need to push back. I don't know if I agree.
Really?
And this is the polite way of breaking a chair on your head.
Okay.
I don't know if I would agree.
Mm-hmm.
If you're looking at, you mentioned before to me, you're talking to a particular PE fund.
Tope Lawami, he's a Helios investment. Yeah, they bought, what's it called? They bought the Shell. They bought Shell, now it's, I think, they bought Total, now it's Rubies or something. Like, they changed it. It was a big deal a few years ago. Yeah.
So I don't know. So when a PE fund tells you that the foreign exchange risk is the biggest risk that they have, I mean, the first thing I would say, well, to begin with, PE funds have a horizon of what, 3 to 5 years? Yeah. And in the case of Helios, they were stretched in Kenya. I don't know if they are there. They pulled out of equity, if I recall. They pulled out of telecom, if I recall. Now, I'm sure there are another millions of other things. But I actually don't think, if you look at Africa, that Kenya is the one that has an issue in terms of, I mean, we've never had that problem, even when I was governor. Why? Because the exchange rate, I mean, if you want to have zero if you want to have a fixed exchange rate, you also know that it is, you have to manage it appropriately, and there has to be liquidity for it, etc. So there are other problems in having fixed exchange rate. It is not a just slam dunk, right? So going back, those PE funds, they may talk about significant FX exposure because of the markets they are looking at. So Nigeria, for instance, as you know, by the way, Elios are really extended in Nigeria. And that's a market that they have been trying to resolve and get a better exchange rate system, right? This they've done, I think, remarkably well in the last 2 years. I traveled there in 2024 actually, yeah, maybe 2025. I think it is 2024. And basically the changes that they've put in place. There was a time they had like 25 different exchange rate windows, and there wasn't any FX available, right? And you'd go out to, you show up at Lagos airport, and there are all those like 300 people hustling you, to change dollars, etc., etc. Now there's a lot more stability. Or you think about Ethiopia the same way, yeah? Ethiopia as well, their exchange rates, but, you wouldn't get the dollars at that price, or dollars, period. They too have, over the last 1.5 years, have done significant work. I was there, I think, in July of 2024 as well. And they've done significant work to allow the exchange rate to actually do what it should, or the exchange market, to strengthen the exchange market, So I would say that if you're into current trading, then the FX really matters, because that's the only thing that actually wipes you out, yeah? I hope that we can say that most of our investors have a much longer horizon. And for me, this is my biggest call, which is let's have long-term investments in Africa. Yeah, this idea of people going in and out like bandits, yeah, go in and grab something and run for the exit and then complain to the government, I want to get out of here. It doesn't make sense. And frankly, it's the people like us that need to be long-term investment. We need to take a long-term bet in our continent. Let's take a long-term bet in our continent. And then if that is the case, the exchange rate doesn't really matter as much. There are many other things that are more problematic. For instance, the issue of taxation. That is a huge risk, yeah? And every year, we always have that problem because every budget will suddenly put in all sorts of things that how do you, if you're gonna be there 20 years, yeah, think of, for instance, somebody like Dangote, right? He just put in, how much did he put in for the refinery? I don't know.
16 billion, something like that, dollars.
So is he gonna pull that out in 5 years?
No.
He's there for the long haul. It's a marriage, yeah, through everything, right? The good, the bad, the ugly, they'll be there. So the point I'm making is we need to have long-term positions and not think short-term. I could also have said that, anyway, so let's do that. Now, it is the business of the policymakers to make that possible.
Yeah.
So, and I think to me, this is the biggest, let's say, weakness that we have looking at Africa. The capital markets are not working. They're not even moribund. They don't work. They don't exist. If I wanted to sell, even think about selling a piece of land, how do you know that this piece of land is actually in my name? That's a big issue. There are 3 or 4 people that have the same title, the same piece of land, right? Or, if I want to sell something if I want to liquidate my position in a particular company and all that, it takes a while to get out of it. Yeah. So, and I think therein, and don't even talk about the cross-border. Yeah. I mean, that is a big, let's say, a lot of talk, but very little action. So I think this is something that we should accept is to be done. My final point is the big one, which is the one of cross-border travel of human beings, like ourselves or yourselves. Yeah, I mean, labor should be moving across borders with some restriction, but pretty free. I mean, to me, it is completely unconscionable that if I go to a particular country, fortunately now in South Africa and Nigeria, if you go there, my passport is good enough. But it's not the case for everywhere, right? So I think we need to do better, less of the talk and more action.
Interesting point. As an investment analyst, I would say, I think we can get the best of both worlds, where we have a long-term view, but still, mitigate the risk in our strategies. I think it's possible, as I'll talk about later. But as I would agree as well, institutional quality is a very important aspect of thinking about investing on the continent. You really have to consider if these governments actually understand this asset class, if they have very strong policies and regulations to actually protect you in case something happens. I'm sure Wakili is going to talk about land as well, and sort of the policies that the Kenyan government particularly has instituted to sort of mitigate a few of these risks. But so I think those are very good points, Dr. Thank you for that contribution. So you're saying you want us to be long-term investors, and I agree. So if you would say there's some volatility, there's some risk, what makes Africa worth that risk?
Well, first and foremost, Africa is a continent of the future. Everybody knows that. And everybody starts there, and then we diverge. Because it's not enough to just say it's a continent of the future. Just to show you how big the problem is, we get something like maybe 10 million young men and women into the workforce every single year. However, we only get something like 3 million jobs every year in Africa. So there are 7 men and women, we call them Gen Zs, floating all over without a job, without whatever, right? And mind you, that number is just gonna be there until God knows when. So we have a big problem, and so to me, it is not enough to say it's a continent of the future. If we don't give good opportunities to our youth, we can just forget the game is up. Yeah? And that's what drives us as policymakers. Yeah? There are many things that we can say, we can do, but if we don't deal with this issue, I think we've lost the continent, we've lost the world. It's like climate change. Until we deal with climate change globally, we can probably just throw away the planet, which is what we're doing. So that's one thing. So it's a continent of the future. Secondly, if you think about it, even other things, we have 1/3 of the world's resources are in Africa. You think of minerals, etc., and a lot of the rare earth metals are there. So it has a lot of potential if you think of it that way. The issue is to put together the mind, the instruments, etc. And the thing is, for me, is we also have very innovative people. Yeah, so if we set them in the right direction, they can actually do something. Yeah, I'm always fascinated by the young men and women when I meet them, whatever it is. Yeah, their thoughts, and Now I'm at MIT, and I talk to some of them, and they will tell you their new project and all that. And it's fascinating the dreams that they have, yeah? I mean, in terms of the products and all that. So in some sense, they are much more courageous than our generation. And for that, I really hope that they succeed, right? There are many other things that one can say that work in our favor. I mean, you have the diaspora as well, right? And we have all the diaspora strength, etc. A lot of you are working here, doing all sorts of interesting things. Remember, now I know, we think of the diaspora like an ATM, right? Yeah? So just give us money and we are okay. Yeah. And I think that's crazy. That barely even scratches the surface. Why? Think of what happened in India. India succeeded because of its diaspora. Meaning you have people, Indians in the diaspora, whether they had US passports or what, that's irrelevant, but they actually moved back. And actually that is what led to the boom in the IT sector in India. Yeah? So if you think of the first people that were there, I mean, in the past they were condemned to being whatever the phone guys, whatever it is, what are those guys called? What do you call the phone service?
Call centers.
Call centers, yeah. So you have all these Indians there, so just let's get them into call centers. Actually, that changed. Yeah, now still you do have call centers, but maybe they moved off to the Philippines or whatever. But the point I'm making is the IT boom was actually by the diaspora. And I think that's what we need to do. Unfortunately, we as policymakers need to make it even more attractive. In the case of the US, of India, it's interesting. They had laws for everything. Yeah, you couldn't make Coca-Cola because they had all that stuff. But then they, in a sense, had left out, forgotten, because the sector never existed. They didn't have any controls on ICT. So actually, when the sector started, there were no controls, right, in that sense, meaning it was able to boom and benefit from the ICT development around the world. So I'm very excited about Kenya, about Africa in general. My view, my final line is that Africa is very much like a rose, okay? Rose in a rose. You know, it has a few thorns on it, yeah? It has thorns on it. But you know, at the end of it, it grabs you.
You know what? That's probably a better sales pitch than anyone can give on Africa. So I know you put it quite succinctly, but you're talking about Africa maturing as an investment destination.
Yes.
So there's the signals to that. Let's say, for example, if your bet as an investor is, okay, Africa is going to become like India somehow, right? You're talking about, I mean, this is hypothetically, right? So you're talking about there's maybe some red tape that needs to be sorted out, or maybe there's governance problems or institutional quality, things that need to be developed. So what are these signals that we need to look out for that actually show that Africa is maturing as an investment destination?
Okay, so I think it's more than that. I think we have to be part of it. It's not so much we sit outside and see all the developments, see the signals, and then move in. We have to be part of the solution, right? When the politicians come and talk to you, tell them, point it out to them. The Gen Zs were able to point out some things, which maybe were there for forever, right? But somehow people had scattered those issues, yeah? I mean, I'll give a silly example. Well, let's leave the example. But things like, for instance, why is it that the rules are not clear? We talk so much about the rule of law, but have no clue what the rules are. Yeah. So you want to start, I don't know, even think of a kiosk or start a farm in Kenya or whatever it is. I mean, how come this is not clear? They tell you, no, go talk to Kenya Invest. And I see some of the people in the crowd that have been involved in some of these things, yeah? And actually there it is just as problematic, yeah. And you also know that you have been taken there sort of like for slaughter, right? I mean, I don't know what the going rate is. Is it 10%? No, it's maybe closer to 30%. Yeah, I mean that's the general sense. Now I can talk freely about things. But I mean, people tell you, yeah. I mean that it's a shakedown, right? So that's one thing, and then other things, very simple things that could really be, done better. I mean, there's a whole list of things, right? But I think this thing of the ease of doing business, more generally speaking, is significant, right? Now, there are other things that maybe are very specific to Kenya, but I mean, one of the ones that I just don't understand. Why is it that we have outstanding bills for so long, right? I mean, the government has, I don't know what the number is now, that it owes contractors, yeah? It is really a huge cost. And the contractor maybe borrowed to build the road, has built the road or the building, and now the bank calls back the loan and puts the guy in bankruptcy. So to me it is straightforward how that needs to be dealt with. If you don't have money, don't build the thing. So this is the point I was making about having coherent policies. Yeah. So it's not enough to just say we are doing this, but is it coherent? Yeah. And if you cannot, and I think the biggest issue, of course, is on the fiscal. Yeah. When we talk about it. Now, I want to make the point that there are signals that come through. Exchange rate is one of them, the direction of it, etc. But I mean, they're signaling, they're giving you a sense. It's like the oil, the sort of the temperature in your engine. It tells you that something is wrong in the system. Yeah. And I think that's one of the things, that the other signals that one sees that one needs to sort of go and find what the root cause is. So for me, those are the sort of things that I would insist on. We need to do better on the coherence of policies, and also realize that we are the people, that we have human beings there. Yeah? We have human beings, and I'm talking now about, for instance, the complaints about hospitals not working, education system not working. This is going to haunt us. Yeah, not just next year, but now. I mean, so I think there's certain things that we know that need to be resolved, and those are the things I would insist that we begin working on.
I couldn't agree more, and I think, it would be an amazing day if an economist such as yourself would run for office, to solve these problems. But, we're not going to get into politics, but I certainly hope in my heart that you think about it one day.
I can tell you I'm running. You can see me on the Charles River.
Thank you very much for that.
Very good.
We have a good day. Thank you so much for joining us for that conversation. Let's take 5. A few of us need to stand up, maybe get some refreshments. We'll get back